Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand with the latest trends on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll also get you expert views to find out where exactly are the opportunities for you as an investor in the current market setup. But first up, a quick check on how the markets are doing at this point in time. Well, the last trading session of this week, this has largely been a very volatile, narrow range and a consolidative phase for the markets. But will the last trading session really end in a thank God it's Friday way is something that we will continue to find out. Let's look at the markets, especially the Nifty and the Sensex. Both are hovering a little up in trade, about 1/10 or 2/10% higher in trade. This comes after yesterday's dips, so looks like the bulls are not yet running away and they're not leaving the field anytime soon. 18,500 currently on the Nifty. The Sensex also about 125 points up now at 62,553. Look at the Nifty bank as well. We will also see some kind of gains coming in after yesterday's losses. It is seeing some kind of recovery coming into place. The broader markets doing better than the benchmark indices, with the small caps definitely outperforming the rest of them with 0.6% of a move on the upside. The mid cap 100 index also up by about 0.4% odd. Now let's also look at some of the other sectors in trade, like some of the auto pack is doing better amidst the sales numbers that have been coming about in the month of May. We've also been seeing slight uptick in the metals pack in today's trading action. The FMCG space is doing better. It's the realty space that's shining bright as well, with over 1% of gains in today's trading session, and that's the focus area of today's trading session. We will find out whether real estate space is something that you should be watching out for. Now also let's look at the top gainers at this point in time. Some of the stocks which are as part of the top gainers include stocks like Hero MotoCorp after the sales number have come out, Hindalco, Dr. Reddy's. These are the stocks that are coming on top of the charts as far as the Nifty is concerned. Titan, HUL, Tata Steel, some of the other Tata Group companies that are also forming a part of the top 5 Nifty gainers. Let's also look at the laggards at this point. So what's not doing well? Adani Enterprises seeing some losses of about 0.5% today. Infosys, Eicher Motors seeing some profits being taken off the table as well. TCS, NTPC, Divis Laboratories. So the IT pack is looking at some profits being taken off the table in today's trading action. But let's welcome our guest on the show. You can also see Reliance Industries slightly down in trade. Kranti Batini joins us from Wealth Mill Securities, Director of Equity Research. Mr. Batini, good afternoon, and thank you so much for taking the time out for this discussion. Your own sense about where are the markets really headed? Now, there are 2 points of view that we have been getting in from all the analysts. Some are saying that, we've actually run up quite sharply in a short period of time. So there is an impending deeper correction, even though it could be you stay for a short period of time, but we may see a deeper correction coming in. But we are just about 200 to 400 points away as far as the lifetime high levels of the Nifty is concerned. Most of the sectors have already touched their life highs. Talk about the mid cap, small caps, Nifty bank also. Some of the other sectoral indices have also achieved that. Where on the debate are you at, in the month of June? Are we going to see those fresh highs, or are we going to see correction?
Yes, actually, you made it a point that bulls are not leaving, and market have climbed the wall of worries. And just a fortnight back or a month back, there were a lot of issues market was struggling with, and we have witnessed such a nice move in the market, and Nifty is standing at tall above 18,500 levels. Uh, and last few days, there is a catch-up rally. What we are witnessing in medium which are creating a strong uh, breadth and foundation for the next leg of rally probably. One thing is the macro environment is quite favorable right now. Uh, uh, in the domestic market, we have witnessing a favorable GDP numbers. Inflation has been cooling off, and the GST collection data, if you see year on year and month on month, the data has been going up on a favorable basis for the market. So the tax collections, the indirect tax collections have been good for the economy. So there are good data points in terms of the macro level. Coming to the earnings season, what we witnessed is a fabulous good earnings season because the expectations are quite low with respect to the earnings season. But there are absolutely no negative surprises from the earnings season. So these are the factors that are creating the momentum in the market right now. Coming to the global factors, crude has been in a favorable situation. It's in a consolidation phase right now, which is in turn helping the Indian markets in terms of the inflation. And what we need to look forward is how the guidance of the Federal Reserve, whether they are going to take a pause or what kind of rate hike they are going to guide. These are the 2 points market is eagerly waiting for right now. Overall, we are at a positive zone right now, but as you said, which camp I am in? The thing
Yeah,
is, it's not the kind of camp I am in, but how the trend of the market is right now.
sure.
We try to follow the trend right now. We are not trying to go against to the tide at this point of time. Sometimes we do go against to the tide of the market, but this is not the time to go against the tide of the market. Probably since the market have witnessed a fabulous rally, it's the time to take some kind of profit from the table if we are the investor or trader sitting on the sitting on profits. It's a time to take some profit from the table and little bit cautious because the domestic environment is quite good, but we need to watch the how the uh, global environment is going to pan out in next few weeks. Most important factor what we are going to track is the monsoon. Monsoon is extremely important for a country like India. So how the monsoon is going to progress domestic. This is the one factor, one event we are going to see. And what is the Federal Reserve guidance? These are the important factors one need to keep in mind and taken into cognizance for the next leg of the rally.
Okay, understood that. Now, there's one space that I wanted to take your view. You know, the Realty pack is really showing some kind of a bounce in today's trading session again, and it has been in an uptrend for some of the sessions as well. How are you really looking at this space, particularly because, I wanted to find out, we've been hearing about how the residential property market in India has actually shown some kind of an upturn, considering the preceding 7-8 years of a downturn in the entire real estate sector, resulting in the pent-up demand. There is also a Jeffries report that has suggested that this property cycle uptrend could potentially continue for the next 3 to 4 years. So I wanted to understand from you, from the investor's perspective, is it the right time to invest in real estate stocks, therefore?
Sakshi, one thing is the main reason for the rally in Indian reality stocks in the past 2 quarters. Okay, we have been witnessing real estate package outperforming, and also stocks like DLF hitting 52 weeks highs, and we are seeing nice rallies in many of the reality stocks. Coming to the point, both in terms of the residential as well as commercial, when we compare the Indian reality valuations and also the real estate values with the global peers, Indian real estate stocks are valuations are extremely favorable. This is the reason one kind of outperformance what we are witnessing, and the kind of numbers declared by the majority of the real estate companies. The numbers have been robust. What we are witnessing is a complete resilience with respect to the sales are concerned.
Hmm.
So that has prompted uh, the stock prices to uh, uh, go in a favorable and a positive territory. Uh, and what we need to keenly observe is, despite of the rate hikes, as we are in the high interest rate regime and the cycle of interest rates are going up. The other hand, the reality numbers, the stocks have been going up, and the numbers posted by the real estate companies, the units sold by the real estate companies are going in a positive territory. It's a completely paradox. But coming to the point in India, we never had, unlike in the West or any other Western European countries or US, we never had any kind of negative interest rate policies or zero interest rate policies. Right now, the rate pause taken by the RBI in the recent monetary policy that has helped the real estate companies, and also the cool of inflation what we are witnessing. It's been giving some kind of positive confidence for the investors and the retail to buy real estate units in India.
Hmm.
So overall, this has been creating. These are the factors that have been creating positive environment for the realty companies in India.
So, which stocks have become hot property amid all this, action that we've been witnessing? Some of the top stocks that you'd like to recommend to investors. How should one really look at these real estate stocks? What is the best way to select them for their portfolios?
See, there is no hurry to jump and buy because DLF, there is a vertical rally what we witnessed stocks like DLF, which are the stocks of the NCR region, and also stocks like Mahindra Life Sciences, Macrotech. They given a bonus issue during this point of time.
Yeah.
So, and the Godrej Properties having a presence of pan India, one can take it into consideration. And stocks like the regional players like Kolte Patil has been giving good numbers and guidance. So one
Yeah.
can keep these kind of stocks which have the pan India presence. Uh, uh, so these stocks can be considered. And also one point I would like to add, Sakshi, right now,
Sure.
because of the new RIRA norms are concerned, the organized players are taking the advantage than the unorganized players. Earlier, real estate is a more mixed bag of both organized and the local players. Right now, the dominance of the organized players is going up. So that's creating some kind of momentum with respect to the larger players in India in real estate is concerned.
All right. Well, on that note, thank you so much, Mr. Batini, for being with us on the show and discussing with us what opportunities really exist for investors who are looking at the real estate space and how should one approach this space amid this current upturn that we've been looking at in the sector as well. Always a pleasure having you with us on
Thank
Business
you,
Today
Sakshi.
TV. The markets are still looking up at this point in time, 136 points of an up move on the Sensex. So they're building onto the gains about 0.2% higher for the benchmark indices. We'll have to keep an eye out on how the second half of trading session will really pan out. But while we will continue to take you through what's really happening on the stock markets, but there's also a very important information that I wanted to pass on to all our viewers today. Now, in case you are a technology enthusiast, Business Today Television is the destination that you should be at throughout the trading session, as it is the day when we are going to be bringing to you the BT Tech Today Congress, which is a conclave, and it will see a whole host of the biggest names from the Indian technology and innovation space. If you're interested in knowing more about what's happening in the artificial intelligence world, the chat GPT world, and what's really happening on the semiconductor pack, everything related to technology, you will get answers to that, because we have the biggest of the names of the industry doing all these debates and discussions throughout the trading session live from Bengaluru. So do stay tuned onto Business Today Television. Many thanks for tuning in for now.
Some people, they want to get better return.
He is a self-styled investment advisor with more than 10 lakh followers on YouTube and more than 5 lakh on Twitter, doling out investment advice to investors, all without having the necessary SEBI registration. His YouTube site even boasts that he is not SEBI certified. Still, investors seem to flock to his videos. On Friday, SEBI cracked down on him and his advisory Manson Consulting and co-promoter Mangayar Karasi Sundar, with all three having to return the advisory fee. According to the settlement, each of them will pay over 15 lakh rupees for a total of 46 lakh 80,000 rupees. The three parties have also agreed to disgorge more than 6 crore rupees, which includes profit from advisory services and interest on the profit, and to refrain from purchasing, selling or otherwise dealing in securities for a period of 1 year following the passing of the settlement order. 2 days after Sundar, SEBI targeted another finfluencer, Gunjan Verma. The capital market regulator found Verma have been offering unregistered investment advice to clients since 2018 and fined her 1 lakh rupees. The action comes just days after Finance Minister Nirmala Sitharaman flagged her concerns over social media